Dig it, Satch?
What's good, everybody? It is the second day of May. The stock market sold off yet again today. We'll go over that in just a moment. But the old saying is sell in May and go away. So the question is that going to be true? We know exactly what we're looking at. I'm going to head over to the charts a little bit early here real quick for you. We know that the market is stuck within this range, and I saw it maybe 10 times on the financial news channels today. We got them all up all over the world, and all of them, in one way or another, drew these lines on the S&P to show that the market is pinching in tighter and tighter. There is no more room left for the markets to go before breaking above or below. It doesn't matter which market you look at. Each one is a little bit different. If we draw them, and actually we should. Let's draw them here on the Nasdaq so we can see it happen together with you guys as we're updating you every day. You can see the same sort of picture here. Everyone in the stock market right now, no matter what you follow, is looking at this area, this trend. This is the Nasdaq that you see on the charts right here. It's the same thing right in the Nasdaq. So unbelievable how tight this is pinching. This is the Dow that you're looking at now. We are getting very close to breaking down below that. Again, the frustration here with traders is the banks, right? Everything else is like, yeah, you know, there's some good, there's some bad, but the banking stocks are really the frustrating part of the market because we know we need the bank stocks to move higher in order for the markets to head higher, and they're just not doing anything. Any start to the upside seems to get sold off. Any day that closes positive seems to get erased to the downside, so it's not looking really, really good for the financials there. Anyways, for now, we've got the S&P sort of in this range here. The next big move in the market will come when we break below or above it. So for now, it looks like we're headed a little bit lower with the bank stocks not able to participate unless something turns there. But keep in mind, if I go back, can you guys see? Yeah. If I go back to the banking sector here, we have all these days where the banks reported good earnings, record trading profits, all sorts of stuff that was good for them, and immediately that was erased. So it really feels like the pressure is to the downside for now. Let's talk about some of the things. Oh, first of all, the Dow was down 175 on the day. The S&P 500 was lower by 19, and the Nasdaq closed lower by 29. They all started pretty good. The Federal Reserve came out with the end of their two-day meeting. They announced that they thought economic growth was good. Inflation was moving closer to their 2% target that they were actually looking for. So they basically had good news coming out. The markets did respond to that briefly. I don't have a way to... Here, I'll show you it this way. You see over here on the left here, here's the S&P 500 after the Fed announcement there. Here's the Nasdaq after the Fed announcement. Everything took off. Here's the Dow after the Fed announcement. Right there, everything looked really, really good. And then it just gave it all up. It was like that was the end of it. So positive comments from the Fed after their two-day meeting. No change in the interest rates. We weren't expecting that anyways. Earnings, not so bad. 79.1% of all the companies that reported earnings did well. They beat expectations. And speaking of that, let's go to Apple. Oh, sorry. I can't type today. Apple stock was higher today, but the problem was, so they had earnings come out, everything was good. Turns out all those chip manufacturers were just pulling our chains, right? It was all good. But the problem is all this, one way to say it is overhead supply, right? So you could say it's all kinds of resistance up here, but there's a lot of overhead supply, meaning every time we get to those numbers, there's a lot of people that want to sell at those prices. So very, very tough for Apple to get anything going, I believe, you know, past this, especially without the stock market helping behind it. So although Apple was higher, they did 52 million in iPhone sales. They were only expecting 52.3, not so bad there. The company keeps buying back stock. I don't like that. That's a little bit weird. They bought back $23.5 billion worth of company stock, which if you go back, we just did a video a couple days ago, and actually all of our videos that are getting ready to come out to our clients talk about taking on debt when you don't need debt, right? That's the simple answer. You can take on debt when you don't need it. Don't take on debt when you need it, and it all, you know, it makes sense. Anyways, that'll be in the classes. Apple keeps doing this, buying back shares, taking on debt to do so. and raise their dividend as well because it makes sense. So they raised their dividend by like 16%. Yeah, 16% they raised their dividend. And they also said we're going to buy back $100 billion more in shares going forward. Facebook was higher today. It actually hit new highs that I hadn't seen in over a month and a half. The media is going to say, oh, it's because they have a dating service. They've announced that they're going to have a dating service for meaningful long-term relationships. Cute, but that's not the reason. Yesterday, Mark Zuckerberg, and going into today, has been making comments about all the great things they're going to do to earn back trust over all your, from that privacy problem that they had going into last week. Now, for those of you that are interested, this one's a little bit sort of different. It won't come up. Beer company, Molson Coors. You know the commercial with the guy with the deep voice? Coors beer. Well, they reported earnings and did not do very well. The stock has fallen under the logo, and we have a little saying, if the stock falls under our logo, it is not likely a good stock to buy. It has fallen completely under the Jazz logo there, down 15% on the day. However, the company did say they weren't going to lower their guidance going forward. They think things will turn around, but they said worldwide demand is a lot lower for beer. For their beer, I should say, for their beer. Shares are down 25% on the year. Other companies that reported earnings, Estee Lauder, if you follow that makeup company. CVS Healthcare was lower. They actually beat expectations, but stock was lower. Clorox also beat expectations. They were lower. And then Garmin beat expectations, did really well, actually. Great day today for Garmin, up 5%. They're still out there making it happen. So that's basically it. That covers everything, I believe, on the day. The big focus is on that pinch, right, that we're looking at. You can call it whatever you want. It's the pinch. What's going on here with the market? Everyone and their mother is going to make major decisions, the short-term traders, once we break below or above. In the meantime, we keep chopping back and forth, waiting for that to happen. It has nothing to do with time. The time correction issue was back here after you fall. Remember, a time correction is after a severe drop. You'll see it where it bounces around and people are making decisions. We've moved on from that. Now we're waiting to see what's it going to be, above or below. I'll keep it that short today. I hope you enjoyed. If you have any questions, you know where to find me. Leave a comment on the video if you like, and we'll go from there. So have a great day, everybody. We'll talk to you soon.